Hello and welcome back to the Money Control live stream. You're watching another edition of Markets with Santo and CJ. And well, Santo, we were talking about the fact whether the market will be able to sustain above the 17,500 level and whether we could see some profit booking creeping up, and lo and behold, we have seen that happen. I mean, the market has had reversed almost entirety of its gains from the morning and slipped into the negative territory, although it has been able to recoup a little bit of those losses. But still, we are looking, it seems like we are heading for a negative or a weak close in the market.
Too early to say, I would say, CJ, because,
yeah, it seems like that. I mean, we are a little iffy at this point of time, trading near the flat line. But let's see. I mean, at this point of time, the cues don't look that much in favor of the bulls.
But the market also refuses to correct.
Yeah, exactly. But if you look at the global cues, Santo, global cues are also mostly weak. If you look at the European market, Asian markets were deeply in red. The European markets are also a mixed bag, and the US stock futures are also not providing any sort of support to the bulls, probably because of that inflation data that is going to come out later in the evening. So there's a little bit of caution creeping in, ahead of that crucial economic data. But overall, it seems like we are in the uptrend, but a little bit of profit booking has come in.
And also, market needs some time to consolidate and digest the gains. It's been almost rising one way up for the last 3 weeks. So it's inevitable that at some point, market will try to consolidate. That's what we are seeing, and in fact it's healthy for the market if it consolidates. Otherwise, the higher it climbs from here and at the same pace as it did till a couple of weeks back, probably then the sell-off could be equally sharp when it's time for the markets to reverse. That said, some traders I spoke to were mentioning that the new margin rules which have kicked in, could also be acting as some kind of a dampener at these levels. That's because now they are expected to put up 50% of the margin in cash. Earlier they could do it completely in stock, so that doesn't have an impact as long as the market is rising. But when market reverses, then it could become a bit of a problem.
And I think, Santo, some of the dealers I also spoke to, they were talking about this 85% retracement level, right? Every time the market has fallen, it has recovered 85%, then it has ended up making a new low, then it has recovered 85%. And incidentally, the 17,600, 700 level is another 85% from the 15,183 bottom that we made, right? So now it will be interesting to see whether the market faces the resistance at that 85% retracement level of about 17,600 or 700, whether we'll reverse from here and maybe make another lower low, or do we break past it and therefore then you have a new uptrend and probably a new bull market starting on the last trade.
Well, CJ, I've never been a great fan of technicals, but this is a market that just doesn't seem to be listening to anything fundamental. So probably it's technical factors, that will decide where the market moves here on.
Well, that said, let's quickly now move on to the stocks that were on our radar and buzzing in trade, starting off with Santo.
Well, Adani Ports, good set of numbers. Overall revenues were slightly flattish, but that was also because the company is trying to reduce its dependence on the SEZ business, and that's where the bit of sluggishness was there. But port volumes were quite good. That's because there's been a distinct pickup in both domestic as well as international trade. Good volumes there. And valuations, the stock had taken quite a bit of a beating from its April highs, and according to Money Control Pro analysts, the stock now is available at 22 times FY24 earnings, which is not very expensive. Besides, there are a lot of positive triggers as well. One is that the core volumes continue to grow well. Besides, the logistics business, which is right now very small percentage of the overall business, that is showing some good growth. 34% jump in growth revenues during the June quarter. So and then there is also the Gangavaram port, which right now Adani Ports owns just about 41%, but that's also shown very strong growth. And once you integrate that with the main company, and then which means that you can recognize a greater amount of earnings from that side, the numbers are looking even better. The target for Adani Ports is close to about 360 million tons of cargo for this year, which at this point looks definitely achievable, or they could even go a little ahead of that.
Well, Santo, I hope your optimism pays off, but I think I would be with the price action at this point of time on the stock. I think the price action on the stock is clearly representing the sort of cautiousness that overall port companies are seeing across the globe because of the fears that economic recession in the US and a possible recession in the EU could hurt, cargo volumes going ahead. Although import demand remains quite strong at this point of time, but we'll have to wait and see whether the slowdown in global trade has an impact on Adani Ports as well. It will be interesting to see how that develops. And for me, I think the second trigger, of course, for the stock could be whether Adani Port goes whole hog on Concor. I mean, that acquisition, of course, has remained in play for the company. Now, whether that happens, and because the reason why Adani Ports wants to acquire Concor is because they're trying to, enter the entire value chain, the entire logistics, and last minute delivery, port cargo handling. So if they are able to do it, well and good, because their recent acquisition has shown that they have a track record of, integrating their acquisitions very well. But this is something I think would remain a key trigger for the stock. And yes, you said that, valuations of course do appear comfortable on a 1 year forward earnings basis. But the key question remains whether volume target will be achievable or not. And I think the second quarter earnings will probably give us a more clearer picture as to where the company stands on that front. Well, one stock that was on my radar today was Vedant Fashion, or as you all would probably know it better as Manyavar, the brand that is owned by Vedant Fashion. Now, clearly, the Q1 earnings, the June quarter earnings were a very strong show from the company, and that should add to the growth outlook that has been, people have been optimistic about the growth outlook for the company ever since this IPO has happened, Santo. And for me, I think what stood out for the fact is that, the company has talked about the fact that they want to diversify away from Manyavar as well, because they don't want to be too reliant on just one brand. And now they are getting into another space with the opening of Mohe stores, basically, which will also add another revenue stream. And a lot of analysts are very, very positive that the company will be able to replicate the success of Manyavar with Mohe stores as well in FY23. Now, you talk about demand. Yes, probably the wedding season aided a little bit in the June quarter. But if you look at Santo, 60%, the secondary sales were 60% above pre-pandemic levels, which goes to show that demand really is, rip-roaring at this point of time. And there is unlikely to be any slowdown on that front. IIFL Securities, by the way, has a price target of around 1400 for the stock, which basically implies about 16% gains in the stock they are expecting over the next 12 months. So clearly, a very strong growth outlook, a very reasonably valued stock available in the market, and something that investors should watch out for.
Well, I would slightly dispute with that very reasonably valued, but
Oh,
that again depends on.
not?
It's about 80 times trailing. I think that's a little stiff, isn't it?
It's not. With the growth that they are giving, I mean, I really doubt that 80
Well,
times.
last 5 years is 11% growth in top line, which even if you knock off the pandemic year, that still makes it about 15 or 16%. So we are not seeing exactly a kind of runaway growth, although there's been a pickup definitely. That's granted.
But if you talk to people who are in the wedding industry, they say the next 2 years are probably the best that the country would have seen in the past 10-15 years. So in that sense, probably that is what the market is pricing in.
Probably yes, but then June quarter, that should have, the numbers should have been much stronger there, because considering that it's the wedding season.
You don't think it's strong?
No, because if you look at December, they did about 373 crores of top line, and June quarter was about 317 crores. So, ideally one would have expected the June quarter to be much stronger, because that's when most of the weddings take place. And besides that, whenever a company comes to the market with its IPO, at that time, rarely do they leave much for the investor. It's most of the positives are already factored in and beyond. And considering that it's been just four months since.
But Vedant Fashion had a very successful IPO, though. I mean, if you remember the stock actually, although everybody was fearing that given the pricey valuation, the stock would probably list at a discount, but it ended up listing at a premium of more than 20%.
Definitely, and from there it has still gone on to right now it's close to about 40% higher, close to about 30-35% higher than its IPO price. So that's what makes me feel probably that at least for the time being, most of the positives may have already been factored in. Well, Tata Chemicals, again, good set of numbers there, and most importantly, the commentary from the management was very, very positive. Now, they expect soda ash prices to remain firm for the next 18 to 24 months. And by the way, Tata Chemicals is the third largest producer of soda ash globally. And the best part was that demand continues to remain strong despite high prices. In fact, realizations have been pretty strong for Tata Chemicals during the quarter, and its salt business too has been doing quite well. And this is among the few nifty stocks which are quoting at close to their record highs. In fact, it's on the verge of again making a high. It had topped 1,000 rupees. It had hit about 1158 odd few months back, then fallen sharply to below 800, but it managed to make a very good comeback from that. So technically, even on the charts, it's looking good. Besides, you have the numbers where realizations, volumes, everything is up, and the demand outlook is also positive. So CJ, I think it would be very hard for you to argue against this
Well,
one.
Santo, I don't know why you read so much optimism in the company's, commentary, and I read so much cautiousness. I mean, the company, it seems like it was trying to hedge every optimistic comment that it was trying to make about its business. And if you look at some of the, challenges that it talked about, I mean, one that stood out, of course, most importantly, is the fact that supply chain challenges is something that they have pointed out could be a risk going ahead for the company. And I think that is something to keep in mind on, because going ahead, not only supply chain challenges, of course, globally also, if there is a growth slowdown, then industry like soda ash would of course get affected. So I think, as good as the June quarter numbers have been, I think it will be a little prudent to be a little cautious on the optimism around what the volume picture could look like for the company going ahead. Yes, and I think that is why I think management has been prudent in the fact that they have tried to hedge every optimistic commentary with a little bit of caution as well. And I think probably you are reading too much optimism, but I think I am going to focus on the cautious side. And because the stock is near its record high, I think it's base to be a little cautious than be too optimistic at this
Well,
point.
just I would at this point then look at the price action. This is an environment where investors market is very cautious about management commentary. In many cases, companies have sounded optimistic, but the market has not reacted positively. But in this case, the company is sounding a bit cautious, and market
is like contra indicators for
exactly.
investors out there. I mean, I don't know. Maybe, of course, Tata Chemicals overall has been, it's been a roller coaster ride. If you look at the 18-month chart of the stock, it has been a roller coaster ride, and maybe things are looking up. But I would still want to wait and see if this performance continues in the September quarter earnings as well. If that happens, then of course there is a lot to look forward to in terms of Tata Chemicals. And of course, let's not forget that Tata Chemicals are also trying to get into the EV space as well through the battery. Santo today is Marico. Well, the Q1 earnings from the company were a little bit of a disappointment. I mean, if you look at what FMCG companies in general have done, it's been a very resilient show from the sector. But Marico, the concerning part was the fact that the weak volumes that the company has posted in its core product portfolio, such as Saffola oil and all that. If you look at 27% year-on-year decline there, although the management has indicated that they remain quite optimistic that volumes will recover going ahead. But I feel that, if you look at most of the analyst commentary, they feel that demand overall for FY23 will probably be much weaker than what they were factoring in at the beginning of the year. So clearly that is a point of concern for Marico going ahead, and that is something that could keep the stock under pressure, or maybe at least keep it underperforming to some of the bigger peers out there in the group. And even if you look at the margin commentary, the management has indicated, much like other FMCG companies, that you could see a revival in margins in the second half. But I just feel that that will probably not stop the earnings downgrade that is coming Marico's way. We have already seen in June quarter, after June quarter, analysts have downgraded the earnings by almost a high single digit, and probably in the September quarter, if the performance continues this way, we could see more downgrades going ahead.
Well, hard to wave a flag for Marico at this point in time, because the stock price has not gone anywhere so far in 2022. Well, that said, a few positives here. Now, yes, agreed, volumes were lower, but the company has also said that it consciously chose to protect its margins and let to some extent volumes
That's
go
a very different strategy compared to what HUL is doing, for example.
Yes, but that said, still, if you go through the company's release, it has said that 96% of its product portfolio has managed to increase market share, which means that it's an overall industry thing. It's not that Saffola is losing market share at the cost of Marico is losing market share to others, but rather that the market itself is not expanding at this point in time, and Saffola and Marico decided to probably hold on to its margins. Besides that, overall margins the company has managed to maintain. Its international business has also shown some decent growth.
That is probably one of the highlights of the
constant currency terms, which is something to look at. So at this point, yes, CJ, I'll not say much in favor of the stock. Probably it could continue to
underperform. It could turn around in the second quarter, who knows?
But you must also see that the stock price has been pretty flattish, in the sense that most of the negatives at this point in time has been.
I think it's just a very uninspiring pick at this point of time. I think if you're looking to even bet on the FMCG space, I don't think investors should be looking beyond the HULs of the world at this point of time. I think if you want to be in that space, probably that is the best bet you have at this point of time.
Well, last stock on a watch list this afternoon is JSW Steel. The stock has seen a spectacular run up over the last 3 or 4 weeks after that big collapse in the wake of
I
the
told you
export
3
duty.
weeks ago when the earnings came out.
Well, and CJ,
The commentary was optimistic, Santo.
well, and CJ, at this point, I think the best is already behind, and maybe it's time to start taking profits in the stock.
Come on.
Well, the company's management was there on our channel this morning, and the commentary didn't seem all that inspiring at all, CJ. Now, there's a huge buildup of inventory in the domestic market. Overall inventory at this point is close to 3 million ton, of which JSW Steel's inventory itself is sitting on inventory of close to 1 million ton. Mr. Sheshagiri Rao also said that steel demand has weakened sequentially, and globally also the demand situation is not all that great. Most importantly, everyone was hoping on Chinese economy reopening and huge demand for steel coming from there. But at this point, exports of steel from China, they were earlier 5 million tons odd, and now that's risen to about 7 million tons over the last couple of months. So at this point in time, huge overcapacity in the market. CJ, there's also a query from one of our viewers, Meenakshi Pai, asking about Hindalco results. We'll just get to that in a point, but I'd like to hear your counter argument on.
So Santo, I think yes, of course, on the demand side, he did sound a little cautious, but on the pricing side, he actually sounded very optimistic. He basically has said that, see, we have already seen 27% decline in steel prices at home since the time the government introduced that export duty on steel exports. Now he has made a case that, of course, with that much amount of price correction, having those exports in those duties in place probably does not make economic sense anymore. And I think he's quite optimistic that government going ahead will probably be able to lift that duty. And I think that could be a good catalyst for the export side of the business to actually improve, because for JSW, exports probably are much more important than the domestic steel business at this point of time. Also, he has said that he basically reiterated what he said 3 weeks ago, that steel prices at home probably have bottomed out. You're not going to see further decline, largely also because coking coal prices have also bottomed out. So going ahead in the second half of FY23, you could see some revival happening on this domestic steel prices as they probably realign with the global prices out there.
One quick point, CJ, sorry to cut you there, but a quick point on the coking coal prices. Yes, it did drop to about $170 per ton, but again, it has started and yet he had actually said that rising raw material prices is in fact a big problem for steel makers in general.
For me, I think if we do see the export duties lifted, and once the domestic prices probably come higher or go above the import parity, then I think you could see some bit of margin improvement. I think JSW Steel has been reiterating that even after the Q1 earnings, that they expect the second half to be much better on the margin side compared to the first half of this year. So I think margin, probably you could see a revival. Demand, yes, it remains to be seen what happens with China, whether the stimulus that probably people are expecting there, if that provides a kicker to global demand for steel, it remains to be seen. But I think at least on the margin side, there appears to be some comfort creeping in.
Well, with that, let's take a quick check on the markets at this point. The Sensex and Nifty continue to be flashes. Sensex is slightly down at this point.
Sensex is slightly down, and Nifty is just at the flat line, higher by just 7 points, Santo. And actually the weakness seems to be creeping into the mid-cap space and the small-cap space, Santo. The Nifty mid-cap 100 is down about 0.2%. Whereas the Nifty Small Cap 100 index is down about 0.4% at this point of time. And incidentally, the India VIX index is also higher by about 1.4% at this juncture as we head 10 minutes before the closing bell. So clearly, I think there's been some bit of profit booking that has come in. Now, Santo, coming back to Hindalco, I think if you look at, going by the first look of the earnings, it seemed like a very decent set of numbers, and clearly the market has also reacted quite positively to that. A 4% jump on the stock after the earnings came out. If you remember, the stock actually was trading in the red territory through most of the opening hours of the day. So clearly, I think, Santo, the overall earnings picture, especially after the very strong commentary from a subsidiary Novelis and the earnings that they gave out, clearly goes to show that market had overreacted back in March and April when stock had seen almost a 20 to 30% decline.
No, it fell from around 640 odd. I think it fell to close to about 300.
Yeah, so almost 50%, almost 50%.
Almost halved
in price. It was a very steep. It seems like market had overreacted a little bit. Of course, we are very, very far away from the highs of during the post-Ukraine war period. But clearly, I think there is a lot of upside still left on this counter.
Well, whether the stock will be able to get past its reset high is to be seen, but at the same time there seems to be a realization that probably the market had been, as CJ pointed out here, the market had been too pessimistic. At least the Novelis part of the business seem to be looking quite good at this point, and the guidance has also been very positive, so that probably should provide a floor for the price.
Yeah. Well, that said, let's quickly move on to the next section, and that is about what we should be watching out for Santo. And clearly, I think you can't look past the US July inflation data that is going to come out later in the evening. Everybody's been waiting on their, biting their nails about how the number is going to be. The initial reports suggest that possibly you could see some weakness month on month in the inflation data, and that will probably turbocharge the bulls, because that would mean that the Fed probably may not have to go so aggressive at this point of time. As Santo mentioned previously also on the show, the market is pricing in about 75 basis point rate hike. So we have to wait and see how that inflation print comes in, and hopefully it will have good news for the market. Also on earnings, Santo, we don't have too many nifty earnings coming out tomorrow, but clearly, companies like Page Industries, Bata India, as well as Sapphire Foods will be coming out with their Q1 results. So something to watch out for on the earnings front as well.
And I'm sure CJ will always look into the positive side of whatever
Always.
Page Industries.
Page Industries has been doing well. Come on, Santo, you can't hold it against the company. The company has been doing quite well, and I'm expecting another resilient quarter from the company, despite the the problems or challenges because of
There
the
you
raw
go.
material
Even
prices.
before the company has declared its numbers, CJ is already saying that it's likely to be good. Well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching, and please do share your feedback on the show in the comment section below.
And as usual, guys, please keep following us on the social media links that you can see at the bottom of your screen. And for rest of your financial news, I don't need to tell you, it's the same place, moneycontrol.com, and download the Money Control app for rest of your news. We'll see you again tomorrow morning at 9 a.m. Till then, have a great day ahead.